All right, what's going on, guys? Hope everyone had a fucking killer week. I don't know if I can even say that word for these videos, but whatever. Who gives? Who cares? I almost said it again. Who cares? Anyways, I wanted to talk about today, kind of Friday market conditions and kind of what like the choppiness and the weirdness we saw today. Kind of just break it down. Um, and make sure everyone understands these types of moves in the market, right? So, going in here on Nasdaq or NQ, we are. I was pretty bullish for the day. As you can see, we maintained a bullish structure all the way up to the top side. We did take out a lot of highs. We took out last Thursday's highs, previous day highs. We took Wednesday, not fully, but we took out some of these highs in the internal range structure. And we have pretty much created more or less a buy model, pretty much. And that's something we can go over, that we go over in the paid mentorship. So I won't really get into that specific model here. But I do want to break down kind of going into Friday. I had this trade. For some reason, a lot of people are actually trading pre-Asia and Asia session yesterday. I'm not sure why. I also did as well, but I noticed that a lot of people I know were trading these sessions. I guess I don't know, more fluid market movement. I guess in Asia. We have a breaker here. Price breaks through. Entry at this fair value gap on the 1 minute. My entry was a little bit higher, but whatever. This is the true entry that I wanted. I kind of just took it off the breaker just to say whatever. This was more like a set and forget type of trade, low contract size. Of course, we hit TP. Moving to Asia, we weren't as consolidated as I like to be. We did have a pretty decent expansion for it being Asia range. This was about 72. I almost said pip. 72-point move. Which is pretty aggressive for it just being Asia session. Now we did have a lot of possible entries along the order flow at all these fair value gaps that you guys see. This one could have went to Asia high. This one we didn't really have a specific target. I guess only if you're going to this previous high for just small profit wins there. Same thing on the way down. You can see a little bit more fluidness, a little bit more easier to read, right? This is, all these fair value gaps along the trend are different entry points that you can attack going with the trend. And that's, coming into Asia where we're pretty much coming up, back, down, right? So moving into today, we don't really see that type of market condition going in today. Now, what I have here is what we call a SMT or a divergence, meaning this candle was different from a correlating pair in that time frame. So I marked this candle here and then this one, which also would have been part of that divergence, right? So we have a high and then we have a low. This is focusing on this down candle. This is the 651 high and a 654 high, lower high. Now let's go into S&P or ES. 651, 654. Notice how this candle on S&P or ES is shorter or did not make the same high as it did on NQ. So with that being said, this is what creates what we call a SMT divergence. What that can lead to is one pair is weaker or stronger. In this case, weaker. And we saw that happen after this drop. So what this was basically price just making this high. Notice how we never really broke or created a bearish structure after we took the sell side liquidity. This was probably the main trade for everyone today, trading these pairs in this area to target these lows. So this was the trade, right? Except it was on NQ, because we have FVG on the backside, right? This is a bullish FVG that we trade through, and it seems like price stays within this structure. Now, regardless if you entered here or up here, they were both ideal spots for that area, meaning both trades still would have went to the same area, and that's what we expected. We didn't really want price to break this area. This will now be considered a rejection block, and notice how price, after you make this rejection block, notice how price starts to move up from this area. You know, we make an aggressive wick. A lot of people think, okay, we're gonna go bearish, but this is the market taking out sellers in any way. This is offering sells into a buy structure, right? So we traded lower when the overall move was to go higher, and from there we shot right up, took out these highs, and notice how again we create a bullish structure. FVG, take out these highs, again FVG, and some people might have missed it in this area because they could have put it here, but we are moving pretty aggressively. So this is where I would choose the highest FVG, or even just scale up and see where it really is. What's the true fair value gap? The 1 minute, you know, you can get good FVG entries, but you're not really getting the full idea of where it's really at. This is the 5 minute. If you want to use the 5 minute for a better perception or better look at what it is, then that's where you would go, right? And then from there we go into a ranging market. But it is also Friday, so you know you don't really want to expect much if you're not really catching anything right at New York Open or the crossover. Cool. But I hope this video makes sense to everybody. Again, if you have any questions, hit us up, follow us, check out our free Telegram. It's free. We answer any questions. We do reserve some topics, and most topics, no, I should say most, but we do reserve topics and certain key points that we talk about for paid members, but we still answer all questions, you know, as much as we can. Awesome. All right, I'll see you guys next time.